Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be Tuesday, the 13th of August, 2024. So before we jump straight into our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right. So as usual, before we jump straight into the short-term intraday technical outlook on the major cross-asset classes, ranging from the major dollar pair, the major stock indices, and as well as the two key commodities market, gold XAU/USD and West Texas crude oil, let's have a recap what has taken shape yesterday in terms of important news flow and their impact on the various major cross-asset classes in terms of intraday performance. So let us start with the US stock market first. So what I could see, the US stock market yesterday was more of a mixed bag, or I would say that is a intraday profit taking day after last Thursday and Friday rally. So what we could see over here is that the S&P 500 ended almost unchanged. The NZD 100 ended with a slight gain of 0.16%, but it's almost flattish as well. But however, the Dow Jones Industrial Average underperformed with a negative intraday loss of negative 0.36%, and the Russell 2000 underperformed with a negative 0.91%. So if you look at the heat map of the S&P 500 yesterday, in terms of the overall performance of the 500 component stocks, there are actually more red than I would say green. So the market is being held up by the two big mega cap stocks, which is NVIDIA, that's up 4%, and Apple up 0.6%, and also slightly by Microsoft 0.2%. And the rest of the other sector, there are more reds than actually green instead. All right. So, and what's important, interesting over here is that the underperformance of the Dow Jones and the Russell 2000 has been more or less been contributed by the fading nature of Trumponomics. So we know that U.S. presidential election is around the corner, and Trump himself is a strong advocate of tax cuts. All right. So once we see tax cuts coming back into the US stock market, potentially we'll see the outperformance of industrial and cyclical related stocks, especially small cap stocks that are primarily geared towards the health of the US economy by Trump's we call it policy, which is Trumponomics. So what we could see over here is that the passage of Trumponomics is fading right now at this juncture based on the current betting odds, all right, by this particular, we call it Real Clear Politics. So Real Clear Politics has this betting average where they actually compiled by the popular betting sites on this ongoing we call it a US presidential election. We call it US election that's going to be held in November. But right now, the betting markets are actually live. So this Real Clear Politics, they compile this betting odds data. So this is the latest one. All right, as of 11, give me a minute, where is it? Yeah, as of 1 second. Let me refresh the page. Yeah, it should be yesterday's data. Okay, so I'm not sure why it's still, let me reset it. Okay, so hopefully it just show the refresh page. Okay, give me a minute. I think it's not showing. Okay, 6 months. Okay, I'm not sure why it's just showing 11. Okay, so no, but if you look at the latest one, this latest odds over here, previously Trump was actually leading. That was before Harris came into the picture, and Trump was leading at 6%, and that we see the also the outperformance in the month of July of the Russell 2000 and the Dow Jones Industrial Average over the NZD 100 due to the high odds of Trumponomics may come into play again. All right, that means i.e. huge corporate tax cuts that could benefit the US corporation, especially those small cap company that is actually heavily weighted in the Russell 2000. And what we could see after Harris came to the picture, Trump odds, betting odds has started to reduce. And based on the latest odds over here is that Harris is now leading Trump by 52.6%, and Trump has declined to 46%. So there was actually a dramatic change in the betting odds right now. The average betting odds as being compiled by Real Clear Politics. That means i.e. if this betting odds were to actually maintain its current momentum heading into, because it's changing every day, right? It's like the price action of the stock market. So based on this current juncture, it seems to us that the passage of Trumponomics is getting lesser, and that could also explain yesterday's intraday underperformance of the Russell 2000 and the Dow Jones Industrial Average against the NASDAQ 100 and the S&P 500. All right, something to keep in mind of, to bear in mind. And also yesterday, we also see a risk of rising geopolitical tension in the Middle East, because yesterday the US Intel community actually issued a kind of a warning saying that the retaliation attack by Iran to Israel right now is increasing likely. All right, and also Pentagon actually now starts to deploy more defense hardware into the Middle East region. All right, and they came out with it as have grown even more likely and may came as soon as this week. So with that, that actually causes the oil price to actually spike up yesterday, and as well as the gold XAU/USD to spike up by 1% as well on the intraday basis. That's actually came within our expectation. Later I'll share with you all where is potentially gold prices likely will be in terms of key levels in the short term intraday technical outlook, right? And overall, the dollar is kind of mixed as well. No change in the dollar, right of tomorrow's release of the US CPI data. So we could see the US dollar over here is the dollar major as of now. It's kind of traded sideways, and the one that is more or less the outlier is the dollar strength is strengthening against the Japanese yen and the Swiss franc, as we start to see last 2 weeks of global risk off behavior starts to a bit or normalize. Right, so we start to see a kind of a mean reversion rebound back into the dollar yen and the dollar Swiss. This is a 5-day. So you look at the 1 month rolling performance is much more obvious. So previously, right now, the previous safe haven outperformance currency, the Swiss franc and the Japanese yen, right now is doing that kind of mean reversion behavior as the risk of globalized risk of behavior starts to normalize. All right, so and the rest of the other currency seems to be just trading sideways at this juncture. All right, so that actually sums up yesterday's key event data and its impact on the various cross asset classes. Okay, so right now let me talk about more about the fundamentals and intermarket dynamics. All right, so starting more focusing on the dollar yen. So we know that the dollar yen right now at this juncture, based on the 5-day rolling performance, the dollar yen is now actually doing that kind of mean reversion rebound. That means the dollar is actually strengthening against the Japanese yen after that 2 weeks plus of dramatic globalized risk off scenario. So the key story over here is that can this dollar yen strength continue or persist? All right, so the answer, we look at it from a fundamental perspective. Unfortunately, if you look at it, the answer is no. All right, that means i.e. whatever rebound that we see on the dollar yen at this juncture could be more or less primarily driven by a mean reversion rebound, but fundamentally the yield spread between the 10-year US Treasury yield and the 10-year JGB yield is not supporting a much more substantial medium-term uptrend continuation, or a new medium-term uptrend on the dollar yen, because the dollar yen has really broken below the 20 and the 50-day moving average. All right, so how do I look at it from if you look at over here, the spread between the 10-year Treasury yield and the 10-year JGB yield, yesterday they managed to have a bearish reaction right off a intermediate resistance at 3.19%. That was the previous medium-term swing low of 28th of December and 30th of Jan, broken down, and yesterday it shaped a bearish reaction of it. All right, and very similar on the shorter term as well. The 2-year US Treasury yield spread minus the 2-year JGB yield spread, broken down below 3.84%. Okay, that was the prior medium-term swing low, former medium-term swing low over here. And yesterday it staged a bearish reaction of it as well. So indicating to us that from a medium-term perspective, this trajectory of this yield spread seems to be more inching downwards rather than heading upwards. That means we are trading in a medium-term downtrend for the yield spread between the 10-year US Treasury yield versus the 10-year JGB yield, and also the 2-year Treasury yield minus of the 2-year JGB yield. All right, so that means net overall, the yield premium of the US Treasury yield continues to shrink against the JGB yield, indicating to us that using Japanese yen as a short carry trade strategy getting less attractive. So whatever rebound that we are seeing right now from a short-term perspective since last Monday on the dollar yen is more likely to be related to a mean reversion rebound. All right, and we know that the sell off in the dollar yen, that means i.e. the dollar yen strength, the dollar yen plummeting downwards, that means we are talking about this push down here. We go for the one-month basis. That means this push down in the dollar yen, that means the sell of the dollar yen, also synchronized to that carry trade unwinding. That means we also lead to that globalized risk off scenario that is also been seen on the major stock indices. All right. So what it means over here is that things are getting a bit tricky right now. That means, i.e., if we start to see another round of yen carry trade unwinding again, that means the dollar yen after that starts to plunge downwards, going forward, it may not see a what I call a rosy scenario for the global stock market from a medium-term perspective. All right, that means, i.e., whatever rebound that we see right now in the global stock market, especially on the major US stock indices, on the NZD 100, especially given the fact that the NZD 100 is much more highly overvalued in terms of valuation. There are more we call it richly valued versus the other major stock indices. We may see another leg of weakness going forward on the NZD 100. All right, so something that to be mindful of as we actually slowly navigate the global markets from a medium-term perspective. All right, so this is one of the intermarket dynamics on share with you. Another intermarket one dynamics on share with you, or fundamental share with you, is more or less related to tomorrow's key economic data. So if we know that tomorrow we will have on Wednesday, other than the CPI data release, we have more related to the Asia Pacific region, will be on the RBNZ, which is the New Zealand Central Bank meeting, the interest rate decision. So market participants is expecting no change to the benchmark official interest rate at 5.5%. All right. So if you look at the interest rate over here, okay, so they have been paused for the 8 consecutive month. Okay, very similar to what RBA did as well, but RBA, the previous meeting just a while ago last week, do a rather a hawkish pause. Why? Because the RBA, the Australia Central Bank Governor Bullock, still concerned about sticky elevated inflation in Australia. That means there are still the path of deceleration inflation trend in Australia is not so visible at this juncture. I mean, that could be seen if I pull up this chart of the RBA mean inflation rate. So take this as a core inflation rate, strip out of food and energy prices. So if you look at the last, because they actually release on a quarterly basis, not on a monthly basis, based on their way of we call it compounding inflation trend in Australia. So if you look at the quarterly Q4 basis over here, since Q4 last year, Q1, Q2, it's been pretty much stabilized. I mean, around 4.1%, 4%, and 3.9%. That means there's no clear path of deceleration since Q4 last year. Whereas you compare it to the New Zealand core inflation rate, also released on a quarterly basis, since Q4 last year, 4.4%, Q1, 3.7%, and the latest one, Q2, 2.8%. So very clearly, the inflation trend in New Zealand is showing a path of deceleration, much more clearer than the one in Australia. All right, so very interesting over here from a fundamental perspective or intermarket perspective, there is a high chance of the Kiwi Central Bank, RBNZ, yes, they may issue a hold tomorrow at 5.5%, but in the monetary policy statement, they maybe pepper it with much more dovish elements tilt rather than from a RBA hawkish hold. That means the RBNZ may guide the market of a dovish hold instead. All right, so that could potentially see a bit of Aussie dollar outperformance against the Kiwi if you were to look at from the Aussie Kiwi FX cross. Okay, later I'll talk about that when I cover the technical outlook segment. Okay, I'll go more about that in detail. But now on the fundamental and the intermarket perspective is that very clearly we start to see a much more clear inflationary deceleration trend in New Zealand versus the one in Australia, and that i.e. could potentially prompt RBNZ monetary policy guidance tomorrow to actually issue a dovish hold instead rather than a hawkish hold. All right, so that covers the intermarket and the fundamental perspective from this segment, today's segment of the daily dose. All right, so with that, now let us now straight away jump straight into the intraday technical outlook on the major cross asset classes, starting with the FX market. All right, so with that, let me expand my screen so that you guys could see clearer. Okay, so now good, so let us start with the FX market first. All right, okay, where is the FX market? Okay, good. Let us start with the euro dollar. Okay, so the euro dollar, no change as it continues to be trapped within this range over here, 1.0950, the upper limit of yesterday's neutrality range. So I still maintain this neutrality range for today on the intraday basis. So neutral between 1.0950 and 1.0895. So the top of this range is very important, 1.095. Why? Because of this gray line here. And going forward, what's this gray line? A quick recap on the daily time frame. So this gray line here is the upper limit of this medium-term symmetrical triangle range configuration that is in place since the high of 18th of July last year. So this is the gray line, now acting as a resistance at 1.0950, which is also our neutrality range that we have for today. All right, so still no change, remains a neutrality sideways stance on the euro dollar for today's intraday technical outlook, 1.0950 and 1.895 level. Only hourly close means suddenly we see an hourly breakout above 1.0950, then potentially we could see a squeeze up to retest last Monday's swing high area at 1.0990/1.10 figure level. Okay, so that's for the euro dollar. The sterling dollar over here yesterday continues to trade sideways, but the hourly RSI managed to actually continues to inch higher. Okay, holding above the 50 level mark. All right, so indicating to us some form of minor intraday bullish momentum that is still inherent in the hourly chart of the sterling dollar. So for the sterling dollar, we are still still using. Okay, I will actually tighten slightly the short-term pivotal support level. Okay, taking into account of last Friday minor swing low. Okay, confluencing with the Wednesday swing high area. Okay, this congestion area here. Okay, 1.2730. I turn it slightly. Okay, so 1.2730 will be my Titan key short-term pivotal support level for today. A breakout above 1.2780 that has been kind of a near-term resistance since yesterday, all right, after a test of it, which is the 50-day moving average as well. A breakout above this level exposes the next near-term resistance level, which is the 20-day moving average, acting as a resistance at 1.2830. All right, so still maintain that short-term intraday bullish bias on the sterling dollar. These are the two intermediate near-term resistance level to watch on the intraday basis: 1.2780 followed by 1.2830. All right, but however, if price action starts to break down with an hourly close below 1.2730, that will actually invalidate today's intraday bullish bias on the sterling dollar to kickstart a potential slide to retest last Thursday minor swing low area, which is so the 200-day moving average, acting as a support level at 1.2660. Okay, that sum up the European currency. Let us now focus on the Asia Pacific currency pair, starting with the Australia dollar. So on the Aussie dollar continues to squeeze up and almost hit the resistance level, the lower limit of 166.10/166.30 that we've been highlighting since late last week, and also correspond very closely to the 200-day moving average as well. All right, over here, this 200-day moving average. Okay, very closely to it. What's interesting over here is that after yesterday's test at the 610 level, the hourly RSI starts to shape a bearish divergence. All right, what I could see here, very clear, a lower high is being formed, whilst the price action on the Aussie dollar shape similar high. So this lower high of the hourly RSI indicate the risk of upside momentum has starts to wane or ease off. All right, over here, that means with this easing of upside momentum, there is actually a low conviction for it to break above 66.30 level, which also correspond to the 50-day moving average, acting as a resistance as well, and also confluence with the golden ratio of the 61.8% Fibo retracement of the previous sell-off or the previous decline from 11th of July all the way up to last Monday swing low. Okay, so given this bearish divergence that is being formed on the hourly RSI, we will flip to a short-term intraday bearish bias for today on the Aussie dollar using 66.30 as my short-term pivotal resistance level. First near-term support level to watch will be at 65.65, which was yesterday's US session minus swing low. A breakdown below 65.65 may trigger a deeper intraday slide towards 65.14 next, right? So these are the two key intraday support level to watch for today. All right, 65.65 followed by 65.14. Only an hourly close above 66.30 will invalidate today's intraday bearish bias to see a continuation of the squeeze up to retest the next resistance level at 66.85, 67 figure level, okay, which is the 76% Fibo retracement next. All right, and also this congestion area over here as well from 28th of June to 1st of July. Okay, so that's for the Aussie dollar. Now, moving on, next will be the dollar yen. So the dollar yen still in the motion of doing that mean reversion rebound over here. So potentially, why? Because the RSI is still holding above this support level. So like I mentioned, whatever rebound we see over here is potential mean reversion rebound rather than the start of a medium-term uptrend due to the fundamentals of that US Treasury yield premium shrinkage against the JGB yield that I covered in much greater detail during the intermarket dynamics segment earlier. So still no change. I will have a Titan key short-term pivotal support level today, very clearly taking into account of last Thursday swing low area that has been acting as a support level, 145.80. So as long as today 145.80 short-term pivotal support level holds, still maintain that intraday bullish bias for this mean reversion rebound leg to play out. First resistance it got to surpass will be at 14850 level. Above 14850 level exposes 151 figure / 15170 next near-term resistance zone. We also confluence with the 200-day and the 20-day moving average, acting as a similar resistance area as well. Only an hourly close below 14580 level. That means price breakdown with an hourly close below 14580 level. Then this mean reversion rebound will be in jeopardy. That means, i.e., our intraday bullish bias will be negated to expose the next near-term support level at 14420. A breakdown below it sees last Monday's swing low area at 14160/40 next. So that's for the dollar yen. So before we go on the FX market, let me touch on for today will be the Aussie dollar, given that we have a RBNZ meeting that is taking shape tomorrow. So what's interesting over here is that the Aussie dollar managed to find a key medium-term pivotal support level last week, which is at the slide that took shape, found support at the key medium-term pivotal support level, and also the 200-day moving average as well at 1.0890. So this is the Aussie Kiwi pair. So if you go down from a weekly perspective over here, okay, so from a weekly perspective, the weekly candle also form a weekly kind of a bullish reversal weekly candle as well, okay, by this long-legged tail on the weekly chart over here, right? It seems to me that there is something wrong with my sound. Let me check again. I hope that everything is okay. All right, I think there's something. Okay, let me adjust my sound again. All right, I think it's better now. Okay, just to repeat again, the weekly candle also formed a bullish kind of a reversal candlestick. That means we do have a bullish elements that is being formed right at a medium-term pivotal support level at 1.0890. And now if we switch back to the daily chart over here, the spread between the Aussie 2-year Treasury, 2-year sovereign bond, minus off the New Zealand 2-year sovereign bond, is still trading in a uptrend as being supported by this rising trend line. Okay, another form of intermarket bullish element that is also supporting this 1.0890 key medium-term pivotal support that is being formed right now on the Aussie Kiwi crosspair chart. So with that, ahead of RBNZ meeting tomorrow, which could be a potential dovish hold, that could actually also potentially see some form of short-term Aussie dollar outperformance, given the fact that there are a couple of supporting elements, positive elements that's being formed right at the 1.0890 short medium-term pivotal support on the daily chart of the Aussie Kiwi pair. So also where is being formed, it also formed right exactly at the 200-day moving average as well. So as long as this 1.0890 slash 1.0840 short medium-term pivotal support holds for tomorrow for the Aussie Kiwi, potentially the first Aussie Kiwi resistance level to watch for tomorrow will be at 1.1030 level. This level here. Okay, let me put it in writing. 1.1030 level. So that should be the short-term resistance level. In any form of potential short-term intraday bullish bias on the Aussie Kiwi dollar. But however, if the price action starts to break down below 1.0890 slash 1.0840, then this short-term intraday bullish bias will be invalidated, and also this medium-term trend will be potentially be damaged as well for the Aussie Kiwi, because it already broke down below the 200-day moving average and also broke down this medium-term ascending channel support from the low of 22nd of February. Then that could actually start to kickstart another extension of this corrective decline to retest 1.0735. All right, so that's for the special Aussie Kiwi technical outlook for today, given the fact that we do have a key risk event that is taking shape tomorrow pertaining to this Aussie Kiwi pair, which is the RBNZ central bank meeting tomorrow. That's the New Zealand Central Bank monetary policy meeting. Okay, so that sum up the intraday technical outlook on the FX market. So let us now focus our attention on the major stock indices, starting with the Hong Kong 33 or the Hang Seng Index. So still no change on the Hang Seng Index. Price action continues to be very, very lethargic below the 200-day moving average and the 20-day moving average that is acting as a resistance, which is so our short-term pivotal, we call it resistance level that we have yesterday, 17,270. So the RSI continues to shape a lower high over here, okay, indicating the lack of upside momentum that is inherent on the short-term price action chart of the Hong Kong 33, i.e. Hang Seng Index. So no change using 17,270 short-term pivotal resistance, still maintain that short-term intraday bearish bias on the Hong Kong 33 or the Hang Seng Index. Near-term support level to watch out for on an intraday basis for today will be at 16,880, followed by 16,720. Only an hourly close above 17,270 will invalidate today's intraday bearish bias on the Hong Kong 33 to potentially see a squeeze up to expose the next near-term resistance zone of 17,410 / 17,517. Only a breakout above 17,517 may see a further push up to retest the 50-day moving average, also acting as a resistance at 17,750 area. Okay, so that's for the Hong Kong 33. Moving on, next will be the Nikkei 225 or the Japan 225. So the Japan 225 finally managed to break out above this bullish minor ascending triangle range configuration. It did a breakout over here. Okay, so with this bullish breakout, we will tighten our key short-term pivotal resistance support level, not resistance level. We will tighten our short-term pivotal support level on the Japan 225 and Nikkei 225 and maintain that bullish bias, the intraday bullish bias, using 34,645 as my short-term pivotal support for today. All right, so it has a bullish breakout. So let me draw that horizontal line over here in dotted green. Okay, over here. So as long as 30, because I don't put it so tight around this range here, just in case of any whipsaw. So using 34,645 as my short-term pivotals, tighten short-term pivotal support level, still maintain that short-term intraday bullish outlook on the Nikkei 225. Next near-term resistance zone to watch out for will be at 36,885 / 37,480, which confluence with the 200-day moving average, as well as this descending trend line that I drew from its current all-time high of 10th of July over here. Only an hourly close below 34,645 will invalidate today's intraday bullish bias to kickstart another round of, we call it near-term weakness, at least for a retest at 32,710 level. All right. However, if we start to see a breakdown below 32,710, then we could start to see this potential minor downtrend now converting into a medium-term downtrend scenario to retest the next support level at 31,400. And even the long-term pivotal support at 30,170 next. All right. So now we are taking things one step at a time to see how the market plays out from here on the Japan 225. Now, next will be the German 30, which is one of the major European benchmark indices. So on the German 30 or the German DAX, no change. Price action continues to hover above the 200-day moving average yesterday, which is our short-term pivotal support at 17,530. So still using 17,530 as my short-term pivotal support in any potential dip or pullback. Still maintain that short-term intraday bullish bias on the German 30 index. First near-term resistance level to watch on the intraday basis will be at 17,960, which is this former clear minor swing low that has been taken out on the downside that triggered this steep decline on Monday, now turns into a pullback resistance, okay, at 17,960. Above 17,960 exposes 18,140 next, which is confluence with the downward sloping 20-day moving average. Only a breakdown of the hourly close below 17,530 will invalidate today's intraday bullish bias to see a further slide to retest the next near-term support level on the intraday basis, 17,380 followed by 17,250 next. All right, so that level, if you do a Fibo retracement of this ongoing rebound, correspond to the 50% and the 50% and the 76.4% Fibo retracement. Okay, so that's for the German 30. Moving on, next will be the major US stock indices, starting with the Dow Jones Industrial Average or the Wall Street 30. Kind of traded sideways yesterday, holding above our first support that we highlighted at 39,235. So this will still be a first support level, but I do not want to use this level as my short-term pivotal support. Still using 38,860 level, which is the lower boundary of this minor ascending channel that has taken form right now. So as long as the any slide didn't surpass below 38,860 short-term pivotal support level, we will still maintain that short-term intraday bullish bias on the US Wall Street 30. First resistance level to watch will be the upper limit of this minor ascending channel at 39,840. Above it exposes 40,110, which correspond to the 20-day moving average, acting as a resistance level as well. Only a breakdown below 38,860 will kind of invalidate today's intraday bullish bias to see a further slide to retest the 200-day moving average, and as well as Monday's swing low area at 38,375. So that's for the Dow Jones Industrial Average, i.e. the US Wall Street 30. Then what we have over here is the NZD 100. So the NZD 100 also continued to trade in a rather tight range. Yesterday sees a test on the first resistance level before backing back down. So still no change. I do not want to tie it so much over here. Still using the 200-day moving average, which is so correspond very closely to the lower limit of this minor ascending channel that is forming right now at 17,960. So as long as 17,960 short-term pivotal support holds in any potential pullback, we'll still maintain that short-term intraday bullish bias on the Nasdaq 100. Above 18,680 potentially sees the next near-term resistance zone to come in at 19,100/19,230, which will correspond to the very closely to the 20-day moving average, acting as a resistance as well. Only at hourly close, a breakdown below 17,960 will invalidate today's intraday bullish bias to see a retest on last Monday's swing low at 17,400/17,310 next. Right, so that's for the Nasdaq 100, and also sum up the intraday technical outlook on the major stock indices. So let us now focus our attention to the commodities market, starting with this gold XAU/USD. So for gold, yesterday we do have a bullish bias. So still recall, gold is still trading within this symmetrical triangle range configuration since its all-time high of 17th July. Yesterday, right smack at the top of the symmetrical triangle range configuration, and right now during the Asia session is staged that bearish reaction of it. All right, since our resistance level has already been met and the RSI is now exiting from a grossly overbought level on an intraday basis. So you look at the hourly RSI, yesterday level was much more higher than the swing high of the start of the symmetrical triangle. All right, so indicating to us that yesterday push up here is a bit overextended. So given that the fact that it's also did that bearish reaction of that symmetrical triangle range configuration, so indicating to us that in terms of probability, this symmetrical triangle range configuration is still intact. So there's a risk of gold XAU/USD on a very short-term basis to do a mean reversion decline back towards the lower limit, the first half of the range resistance, and below it may expose the lower limit of this symmetrical triangle range configuration. Okay, pardon me, not range resistance, range configuration. So with that, flip to a short-term intraday bearish bias to play that potential mean reversion decline within this symmetrical triangle range resistance configuration. On the very short-term intraday basis for today, first near-term support level to watch 2,457. Below it exposes 2,435 and potentially even 2,415 next, which is the 20-day moving average, pardon me, acting as a support level. Only a breakout above 2,483, that means today's short-term pivotal support level, which is the current all-time high area, may see a clear bullish breakout to expose the next near-term resistance level at 2,510 next on gold XAU/USD. All right, so that's for gold. Now moving on will be the West Texas crude oil. So the West Texas crude oil yesterday sees a squeeze up above our short-term pivotal resistance level, which is 78.46, due to this heightened geopolitical risk tension in the Middle East that could actually disrupt oil prices in that region. So with that, given this very strong push up that we see on the West Texas crude oil yesterday, and also the RSI also grossly overbought level as well. Okay, so this overbought level is the highest so far. All right, the highest level since 2nd of July, even higher than 2nd of July. So given the fact that the RSI is at the extremely overbought level, there's a chance of a potential minor pullback, all right, in the intraday basis, coming back towards the 20-day and the 200-day moving average that's acting as a support level at 48, 46 level as well. So with that, we'll flip to a neutrality stance for today, a neutral between 80, 30 and 48, 46 level, given the grossly overbought condition that is being depicted now on the hourly chart of West Texas crude oil. Okay, so with that, that sum up today's intraday technical outlook as well on the major cross asset classes. So before we go, let's take a look at the calendar. What are the key data to look out for today? All right, so for today over here, okay, during the given the fact that the European session, things to look out for will be labor data coming out from UK that could impact the sterling dollar, which is the unemployment rate out at 2 p.m. Singapore time, and together with the monthly employment change figure. Then going forward, we do have at 5 p.m. this will be the Eurozone Economic Sentiment Index, the group one. That means that comprising the aggregate, all right, that's out at 5 p.m. Singapore time. And more pertaining related to the Germany that could impact the German DAX out at 5 p.m. Singapore time will be the Germany ZEW Economic Sentiment Index for the month of August. Then heading towards the US session, we do have factory gate prices, PPI. So this is not really that important compared to CPI, but something to actually take a look at, to pay close attention to if we start to see a spike up in the core PPI year on year. So market is expecting a low ball figure again at 2.7% year on year, below 3% year on year that was printed in June. So that is 8:30 p.m. Singapore time. All right. So other than that, we do have this data that is still not yet out. It's supposed to be out yesterday, this China data regarding about the situation of the lending environment in China, which is also very, very lackluster due to the deflationary risk scenario. So money supply year on year growth and outstanding loan growth, something to pay attention to, but no given time yet that is being announced. All right, so it could be the end of Asia session, but this is being delayed because it was supposed to be announced yesterday. And later, early Wednesday, 1:15 a.m. Singapore time, we do have one Federal Reserve official speaking because the Fed posted this speech. And also last but not least, which I mentioned earlier at the start of today's daily dose, 10 a.m. Singapore time will be RBNZ interest rate decision. And 1 hour later at 11 a.m. will be the RBNZ Governor Press Conference. All right. So with that, that sum up today's intraday today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.